If you went to your doctor and they gave you some tests and then a treatment plan, would you expect that their answers are going to be the exact same as the ones that your coworker got last week simply because they also went to the doctor? No, right? So why do we think that mortgages work that way? Lots of people think that there's a standard mortgage rate, and there's not. There's a lot of variance in the rate that you're going to get and what you'll pay for it. There are four main components that go into that rate. Some of them you can control and some of them you can't. The biggest impact on your rate that nobody can control is going to be the bond market. And that's because mortgage-backed securities are the basis for rates. And in times like this, when inflation is high, rates are high. The second thing is going to be how much the lender is going to make off of you, basically their margins. And while that isn't something that you can control, this is what people are talking about when they're saying shop your loan. But remember that cheapest isn't always best. Do your due diligence to find a lender that is experienced and knowledgeable enough to give you the advice that you need. Saving a few bucks in the beginning might result in an expensive decision that costs you thousands in the long run. The third impact to your rate is what are you paying for that rate? In other words, if you want a lower rate, you could perhaps pay a little bit more in closing costs. But you need to have the conversation of how long you think you'll keep that mortgage and if that upfront cost will give you enough monthly savings fast enough. And the last factor are the things that you can control. It's all of your personal details. But keep in mind that there are over a dozen different factors that go into that rate that is quoted. Things like your down payment, your credit score, the loan type, how much you're buying, and where you're buying. So if you're comparing quotes, make sure that both lenders have the exact same data because there can be a big impact for any kind of variance. Oh, and the rates that you see online are typically fake clickbait. They want to get your information and probably pitch you another program. We know that looking at WebMD is not the same as going to your doctor and getting personalized advice. So don't self-diagnose your mortgage. Get the right advice so you can get what you want.